Hi, this is your economic change agent, Dr. Trevor Anthony Woolery for the Wealth Builder Network. Welcome back. Let's introduce the simple but powerful accounting identity. Income minus expense equals assets minus liabilities, where I, income minus expense, equals profit, and A minus L, assets minus liabilities, equals net worth. The identity shows that profit, that is cash flow after living expenses are deducted, is directly related to your net worth, that is total assets minus the value of what you owe. The value of this identity lies not in the profit number on the left-hand side or the net worth number on the right-hand side, but in the relationship between the four components: income, expenses, assets, and liabilities. Income derived from active sources enables you to purchase passive and portfolio assets which produce more income. Liabilities, that is debt, produce interest expenses, which can reduce the profits and thus your ability to acquire good income producing assets. Note, however, as your liabilities fall, your expenses fall, which increase your profits and thus increase your ability to acquire more good assets which produce more income. That's a great thing. So the lesson here is that it is imperative that you eliminate your debts quickly in order to start living prosperously. The wealthy are wealthy because they own passive and portfolio type assets that produce passive and portfolio income, which can be and is passed down to their children via wills or through intergenerational transfers of assets and businesses. They and their families do not rely on individual type assets, such as jobs or self-employment, for income, which are both limited because individuals can only work and stretch themselves for so many hours. We will talk more about this in the coming videos. Passive and portfolio assets aren't limited in this way. These assets will continually provide income whether their owner works or not, and can be owned to a theoretically unlimited degree, which means that the income they produce is theoretically unlimited. The wealthy know this, which is why they concentrate their energies on acquiring as much passive and portfolio type assets throughout their productive lives. The poor don't realize this, which is why they earn an individual type income and concentrate on getting marginal increases in their salaries that are always in the control of others and limited in their increase. We will talk more about this in the next video. The following table summarizes social class by asset ownership. What does your income and asset profile look like? Where do you stand? What changes will you now make to transform your wealth position and economic experience? So, what are you to take away from the information and content of this video? You should have learned that the key to wealth building is working to minimize your reliance on active income sources, such as salaries from a job, by persistently pursuing the acquisition of good assets or passive investments and portfolio investments that lead to the production of passive and portfolio incomes. Eventually, These new income streams will exceed the income contribution of your salary and become your main source of income. Thus, by engaging the three income streams, you will successfully transform your wealth position and economic experience. A core goal of the Wealth Builder Network is to position its members to earn large active incomes so that they can use their incomes to acquire the passive and portfolio assets, the good assets that produce passive and portfolio income streams that characterize the behavior of the wealthy 1% of the U.S. and the world. You have been the beneficiary of a life-transforming message from your economic change agent, Dr. Trevor Anthony Woolery. I look forward to working with you to live life on the other side of success and wealth.